In the world of modern scientific research, from pharmaceutical breakthroughs to environmental testing, Thermo Fisher Scientific is almost everywhere. Generating over $45 billion in annual revenue, this company provides the mechanical and digital foundation for laboratories across the globe. Over decades, they have built a reputation for relentless expansion, steadily acquiring specialized firms to maintain their dominance in the healthcare sector. But in August 2026, the company made a move in the opposite direction. They decided to carve out and sell a highly recognizable piece of their own history. Thermo Fisher finalized the sale of its legacy microbiology testing division to the European private equity firm Astorg for $1.075 billion. This wasn't a struggling business. The microbiology division, which produces the culture media and susceptibility tests used in food safety and clinical labs, brought in $645 million in revenue in 2025 alone. Why would a company obsessed with scale intentionally shed a division that brought in over $600 million in a single year? This transaction suggests that Thermo Fisher is liquidating its traditional holdings to make room for a different type of investment, signaling a move away from the physical tools of the past. Chairman and CEO Mark Casper is the architect of this transition. Under his direction, the company is reallocating capital toward high-value data pipelines. The first major piece of this puzzle arrived in March 2026, when the company spent $8.875 billion in cash to acquire Clario Holdings. Clario provides the software and digital systems used to collect patient data during clinical trials. Their platform is integrated into the industry to a staggering degree, supporting approximately 70% of all novel drug approvals by the FDA and the European Medicines Agency over the last decade. 5 months later, the company committed another $3.1 billion to acquire Olink. Olink specializes in next-generation proteomics, the large-scale study of how proteins interact in the body. Mapping these proteins allows researchers to develop precision medicines tailored to specific genetic profiles. This focus on high-end data also drives their internal engineering. They recently introduced AI-driven Orbitrap mass spectrometers, which use advanced analytics to identify hard-to-detect molecules by measuring their mass-to-charge ratio with high precision. By replacing physical culture media with clinical data pipelines and protein mapping services, the company has shifted its primary business from supplying the laboratory to managing the data that flows out of it. The financial results of this shift became clear on July 23, 2026, when Thermo Fisher released its second quarter report. Total revenue rose 10% to $11.99 billion, including 5% organic expansion. Meanwhile, adjusted earnings per share reached $6.03, representing 13% growth, which significantly beat Wall Street's $5.72 projection. This wasn't the result of a single lucky segment. Growth was reported across all 4 business divisions, including pharma and biotech, diagnostics, and analytical instruments. These outstanding figures provide clear evidence that liquidating older legacy assets to fund high-tech data acquisitions is working. By moving into high-growth markets like clinical data, Thermo Fisher has generated higher operational margins and profits that exceeded market expectations. Following the Q2 performance, Thermo Fisher's leadership immediately raised their financial targets for the rest of the year. This visualization compares the previous forecast with the updated targets. The company now expects up to $48.1 billion in total revenue for 2026, with an adjusted earnings target of up to $25.33 per share. Approximately $1.6 billion of that 2026 revenue is expected to come directly from the newly acquired businesses. Beyond the balance sheet, Thermo Fisher is aggressively scaling this data-heavy model across its global operations. In August, Global President Gianluca Petiti met with China's Vice Minister of Commerce to discuss trade relations, ensuring the company maintains its presence in one of its most important international markets. At the same time, the company is expanding its physical infrastructure in emerging markets, opening bioprocess centers and customer experience hubs in India's Genome Valley. These moves, both the acquisitions and the global expansion, are designed to capture a $255 billion addressable market for scientific services. The strategy for 2026 has been a calculated trade. By divesting its legacy microbiology assets to fund the acquisition of data platforms like Clario and Olink, Thermo Fisher has transitioned from a supplier of lab tools to a provider of the data-driven infrastructure that fuels modern scientific research.